Across the world, a quiet emergency is unfolding, one that will shape the future of every worker, every retiree, and every generation to come. In the 1950s, the United States had 16 workers supporting every one retiree. Today, that number has collapsed to fewer than 3. Japan's workforce has shrunk by millions. France spends a staggering 14% of its GDP on pensions, and China is aging faster than any nation in history. These aren't distant problems. They're warning signs of a global pension crisis that is already here. Imagine paying into a retirement system your entire life, only to discover it can no longer support you. Imagine being part of the younger generation forced to carry an unsustainable tax burden or work far longer than expected. This crisis isn't just financial, it's deeply human, and the longer we wait to address it, the harder the solutions become. The global pension crisis is not a single country issue. It is a structural challenge affecting nearly every developed nation. Systems built decades ago assumed large families, short lifespans, and a steady flow of young workers. But the world has changed, and those assumptions no longer hold. People are living longer than ever before. Fertility rates have plunged below replacement levels, and the demographic balance that once sustained pensions has completely shifted. By 2050, 1 in 6 people will be over 65, placing enormous pressure on governments and taxpayers. Pension funds are running short, trust funds are nearing depletion, and political leaders face impossible choices. Raise taxes, reduce benefits, increase retirement ages. None of these options are easy, yet doing nothing accelerates the crisis. In this video, we'll explore what caused the pension crisis, how different countries are experiencing it, and what can be done to secure a stable future for generations ahead. That's the core of the pension crisis is a profound demographic transformation. Life expectancy has increased by more than 30 years since the mid-20th century, meaning people are collecting pensions for far longer than the systems were designed to handle. Meanwhile, fertility rates in most developed nations have dropped well below the replacement level of 2.1 children per woman. Fewer births mean fewer future workers contributing to pension systems, creating a widening gap between those paying in and those drawing benefits. Countries like Japan, with a median age approaching 50, illustrate the extreme end of this demographic curve. As populations age, healthcare costs rise, workforces shrink, and pension obligations swell, without adjustments to retirement ages or contribution structures. Most current pension systems are headed toward unsustainable. Nations face distinct versions of the same crisis. In the United States, Social Security trust funds could be depleted by 2035, triggering automatic benefit cuts of around 17%. State pension funds also show massive gaps, with over $1 trillion in combined shortfalls. Japan's challenge is demographic. Nearly 40% of its population could be over 65 by 2050. China, after decades of the one-child policy, is aging at record speed, risking pension fund depletion in the early 2030s. France spends an enormous portion of its GDP on pensions, fueling political unrest whenever reforms are proposed. Meanwhile, emerging economies are aging before they become wealthy enough to support large retiree populations. These examples reveal a universal pattern. When fewer workers must support more retirees, even well-funded systems face severe strain, making reform urgent and unavoidable. Despite the urgency, governments struggle to pass meaningful pension reforms because the trade-offs are politically volatile. Praising the retirement age often sparks mass protests, as seen in France. Cutting benefits risks pushing seniors, especially vulnerable ones, into poverty. Increasing taxes places a heavier burden on younger generations, already dealing with rising living costs and unstable job markets. Privatization, once seen as a promising alternative, has proven risky. Chile's highly praised 1981 private pension system eventually required government intervention when low contributions and market fluctuations left many retirees with inadequate income. Politicians frequently delay reforms to avoid public backlash, but postponement only worsens the crisis. Each year of inaction leads to deeper deficits, tougher choices, and larger generational tensions. The result is a policy paralysis that leaves pension systems racing toward insolvency, while political leaders hesitate. Some nations offer valuable examples of successful pension reform. Australia mandates employer contributions into private retirement accounts, creating a robust $4 trillion pension market and reducing reliance on government support. Denmark automatically ties its retirement age to life expectancy, preventing political gridlock and ensuring long-term sustainability. Sweden's system adjusts benefits based on economic conditions and demographic shifts, maintaining stability even during financial crises. The Netherlands and Germany also use mechanisms that encourage personal savings while keeping public pensions steady. Canada and New Zealand apply means-tested or taxed pensions, ensuring that support reaches those who need it most. These models share common elements: transparency, gradual adjustment, and flexibility. By aligning retirement policies with demographic realities, they build trust and protect future retirees. They prove that with thoughtful design and political courage, pension systems can remain fair, strong, and sustainable. The global pension crisis continues unchecked. Future retirees may face lower living standards, deeper poverty risks, and greater reliance on family support. Younger workers could face heavier taxes and longer working lives. But the future isn't hopeless. Technology, especially AI, is reshaping the workforce and may help create new opportunities for income and savings. Upskilling platforms can prepare workers for jobs less vulnerable to automation, improving career longevity. Innovative proposals like giving every newborn an investment fund that grows for decades show the potential of creative solutions. Ultimately, the path forward requires early action, clear communication, and adaptable policies. Governments must acknowledge demographic realities, businesses must support long-term financial planning, and individuals must prepare for a changing economic landscape. With foresight and innovation, we can transform this crisis into an opportunity for more resilient retirement systems worldwide.